Yo, what's happening, guys? Good morning. You've tuned into Rules for Rebels. What I wanted to talk about in today's video was kind of the fear that a lot of people have that, oh, I can't buy a house right now, or I can't invest in real estate right now because markets are at all-time highs, right? There's going to be a crash, or there's going to be a correction. Things are going to pull back, and I'm going to sit on the sidelines and wait for things to come back before I get in. And we're hearing the same thing, probably even more so about the stock market, right? The stock market's too high. We're at all-time high. You know, I'm not going to invest in the stock market. It's too high right now. I'm going to wait for things to pull back before I put my money back in. And I would love to hear from you guys. You know, go ahead and drop a comment down below. Let me know your thoughts. Like, have any of you guys pulled money out of the stock market or sold off, you know, real estate investments? Are any of you guys sitting on the sidelines who want to buy a house but are holding off on buying a house because you feel like things are too high? I'd love to kind of hear from you guys, and I actually wanted to make kind of a longer, more well-planned out, well-thought-out video on this topic. I just got about 10 minutes here to kill in the car, so maybe we'll kind of use this video as kind of a discussion starter, and then maybe I'll make a follow-up video kind of seeing what, you know, where you guys are sitting, what concerns you guys have, and we can kind of make a follow-up video and kind of discuss this a little bit further. But they're definitely, you know, I'm on a lot of, you know, personal finance and investing kind of message boards and things like that. That's kind of an interest area of mine. And one thing you hear on a daily basis from people is like, I got $10,000 to invest. Should I invest it because, you know, my friend's telling me that there's going to be a crash, or things seem like they're too high? And, you know, in the kind of personal finance investing community, one thing that everybody will tell you is time in the market beats timing the market. And what that means is, you know, over the long run, markets go up. At least historically speaking, it's a pretty safe bet. So you're better off putting money into the market than sitting around, you know, trying to figure out when to put money in the market, because it might never happen. And kind of another common phrase that we hear is, the best time to invest was yesterday, and the best time after yesterday to invest is today. And that kind of goes along with the whole timing the market. Time in the market beats timing the market. Now, I'll say I share the same concerns as you guys. I've been in the market to purchase another rental house for a while, and I look at house prices and I'm like, I don't feel like things are worth that. You know, I bought a house, I don't know, maybe 8 years ago. I lived in there with a couple buddies for a few years, did kind of the whole house hacking thing. Now it's a rental. I've moved to a different house. But, you know, I bought my house for $86,000, and that same house today is selling for, you know, anywhere from $160,000 to $180,000. And in my mind, I'm like, I would never pay $180,000. I mean, my neighborhood is kind of sketchy. In my mind, I'm like, I would never pay $180,000 to live in that neighborhood. I think those houses are worth, you know, $115,000. I'm not comfortable buying at these prices. But, you know, just to kind of play devil's advocate or whatever, a couple years ago, those houses were at $115,000, $120,000, and I was telling myself they're not worth $115,000, $120,000. They're worth, you know, about $90,000, or I should be able to find a good deal on a short sale or foreclosure. And in those couple years that I sat around doing nothing, those houses that were $115,000 are now $175,000. So, you know, I think I feel the same way as you guys. I got probably more money in cash right now than I should. I should have more of that money into the markets. But, you know, I kind of wrestle with the same feelings that, you know, a lot of you guys probably have. And, you know, it's kind of a common theme that I'm seeing online. And it's kind of funny, on a lot of the personal finance message boards and things like that, you'll see people say things like, you know, I know I'm not going to be able to time the market, and I know we shouldn't time the market. But there's always a but. But things are really high right now, and this is this, and I'm going to sit back and wait for things to come down. I got a couple friends who are thinking about buying a home right now, and they're talking about, oh, we're not going to buy it right now. We're going to sit back and wait for prices to come down. You know, my folks moved to Charleston, South Carolina 5 years ago, 7 years ago, something like that. And at the time, I was thinking about buying a condo, having them rent the condo from me. And they weren't going to be down there forever, but I knew they were going to be down there for a couple of years, so I was going to have them rent the condo from me. I know I got a stable tenant and somebody who's going to pay rent and take care of the place, and, you know, start building equity in there. And that market was hot as well, so also kind of make some money off the appreciation of that market. Well, I sat on the sidelines for way too long, and a lot of those houses have doubled and even tripled in price. Charleston is a really, really hot market, and one kind of unique thing about Charleston is because it's, you know, a collection of islands. You got James Island, Johns Island, you know, the Charleston Peninsula, Daniel Island. because it's all islands, there's a lot of water. You're limited in where you can build. And also they got the ocean on kind of the east and northeast of Charleston. So, you know, unlike a lot of, you know, Chicago, suburbs can sprawl north, south, east, west, or I guess not east, then you got the lake. But in Chicago, suburbs can sprawl north, south, and west, and just go further and further and further out in areas that were cornfields before. In Charleston, there's really only one direction. Like, things can only really expand north. And they can't build enough housing to cater to all the people, and more people are starting to move to the southeast. And as more people move to the southeast, you're starting to get more business down there. Boeing's starting to expand their operations. I think BMW or Mercedes has a plant down there. Blackbaud has a big operation down there. Haynes is down there. And as more people go there, there's a great labor market, so more business starts to go there, and it's just going to continue to kind of expand and grow, and real estate prices are going to continue going up. And in a lot of areas like Mount Pleasant, they're actually putting caps, like no more multifamily housing. They're you know, halting all building and things like that, because the city's just growing faster than it can kind of sustain itself, or faster than kind of the roads and infrastructure can handle. And you know, I think it's a common feeling that, like, everything should be cheaper. I was at Subway the other day, and I got a, you know, like a foot-long steak sandwich, and it was like $9. And in my head, I remember back to when you know, everything used to be $5 footlongs, and now I'm paying almost $10 for a Subway sandwich, and it doesn't feel like it should be that high, right? And I realize food and Subway isn't like housing, but you know, over the course in time, pretty much everything goes up in value. Everything becomes more expensive. It doesn't necessarily appreciate, but everything becomes more expensive, you know, due to inflation and everything else. And you know, I just think whereas a lot of people are saying housing is overpriced right now, I think it's just kind of the new norm. Another thing about this whole kind of timing the market idea is, so if you look like year over year, I think 2016, the market was up like 12, or I guess we'll talk about the S&P 500. 2016, I believe the S&P 500, or like VTSAX, was up, I don't know, something like 13%. 2017, I believe, was up like 23%. 2018, I think it may have been down 4%, but the year before we had almost 24% growth. And then 2019, I think we're up another 10 or 12% this year. So people have been calling for a recession since 2016. If you had been sitting on the sidelines since 2016, you missed out on something like 43% gains, or 43% in 43%. You would have made 43% on your money. So if you had been sitting on the sidelines waiting for this pullback, even if a month from now the market pulls back 25%, which would be a pretty big pullback, you're still paying more than had you just invested back in 2016, right? Had you invested in 2016, you'd be up 43%, you're down 25%, you know, so you're still up 43, 33, 23, you're still up, what, 17% or something like that? And that kind of shows the whole time in the market beats timing the market. As far as real estate, you know, real estate and the stock market, because kind of housing is what kind of caused the last stock market crash to a large extent. You know, 2008 was a once-in-a-lifetime situation. Lending practices aren't what they were. You know, we're not doing these no-doc loans. People aren't getting 110% loans and not having to put down a down payment or pay closing costs. It's just not the same situation that it was back in 2008, so you really shouldn't be fearful of that. Like, could there be a pullback in either housing and or the stock market? Sure, but you really shouldn't be investing if your time horizon is like 6 months or a year or 2 years in the first place. And I would say it's pretty safe to say that, you know, if you invest over the course of 2 to 3 years, even if things pull back, they're going to be higher in 2 or 3 years than they are today. Another thing about real estate, you know, one thing, I know not everybody wants to be a landlord. I kind of want to be an accidental landlord, but my house, my mortgage payment's about $743. My house rents for $1,400 a month. So not only, and that $700 includes my taxes, my homeowner's insurance, everything. So, you know, that's kind of my entire nut there. So not only am I building equity to the tune of, you know, not that the whole 700 is going to the principal, but not only am I building equity to the tune of, I don't know, $400 or $500 a month, but in addition to building that equity, I'm also putting $500 to $600. I have a property manager, so they take a chunk out of that $700. But I'm also pocketing $500 to $600 every single month that I can either double up and pay down the mortgage faster. I can set aside for emergencies with that house. I can start putting away to buy another rental property. you know, so if you're thinking about buying a house and you don't know if you're going to be there for the next 5 or 10 years, or you're worried about being able to afford, you probably shouldn't buy a house you're worried about being able to afford, but you know, shit happens in life. But if the house that you buy, when you buy a house, look at the price you're paying, look at what the mortgage is going to pay, and then look at what something in that area rents for. Now, back during 2008, like, rents didn't, you know, I don't think rents went down substantially. So if you're getting $800 a month in rent prior to 08, you're probably getting close to $800 a month, you know, after 08. And if you have somebody in a long-term lease of 2, 3, 4 years, you know, they're going to be paying the same regardless. So when you buy a house, you know, just to kind of keep yourself flexible, make sure that the rents in the area are going to cover your mortgage plus 10%. And, you know, regardless of what happens to the housing market, if you have to move, if you lose your job and you can't afford the house, you know, you can always rent out that place and not only, you know, cover your nut or cover your mortgage, but also make a little profit and continue to build equity. So, like I said, you know, I'm in the same boat as you guys. I have the same feelings. I'm a little bit nervous going in. I think about it like this. Remember when Bitcoin was at 20,000 and people were like rushing to buy it? And it's kind of when you knew, you know, I didn't realize it at the time, or I didn't want to see it at the time. You know, I kind of got filled with excitement and maybe greed, but you know, everybody was rushing in to buy Bitcoin from 15,000 up to 20,000, but when Bitcoin pulls back to 3,000, nobody wants to buy. And kind of the idea is when there's kind of a fervor, everybody's excited about something, that's when you want to get out. You know, it's kind of like the whole Warren Buffett thing. Be fearful when others are greedy, and be greedy when others are fearful. And you don't hear everybody right now saying, I have to buy a house right now, or I have to dump a bunch of money into the stock market. As soon as we start hearing that, you know, then it might be time to get out. But right now, there's no signs of, I don't want to say there's no signs of things slowing down. The real estate market's cooled a little bit, but we are heading into spring when things are going to be, you know, kind of picking back up, or at least that's normally what happens. So we'll kind of see what happens. But, you know, there's not this fervor of I have to buy a house, I have to get into investments. And so that tells me to keep buying. But I'd love to hear from you guys, kind of like, do you guys, you know, wrestle with these same feelings? Like, man, houses seem really expensive, or the market seems really high right now. Keep in mind, there will be a recession. There will be another recession. We just don't know if it's going to be 5 days from now, 5 months from now, or 5 years from now. So, like they say, you know, scared money don't make money. Historically, markets expand. Things are always going to be, theoretically, always going to be higher in the future, short of some crazy calamity. Who says calamity? But that's all I got. Like I said, I just wanted to use this video as a discussion starter. I'd love to hear your guys' comments, and maybe we'll make a follow-up video and talk about this a little bit further. Thanks for watching, and I'll catch you guys on the next one.